Ever wondered how the most successful people make their financial decisions while investing? What secrets do they know that we don't? In both our personal and professional lives, the choices we make about investing money can have lasting impacts. A wise investment decision can lead to prosperity and security, while a poor one can set us back significantly. This brings us to a crucial lesson, a concept beautifully illustrated in Benjamin Graham's classic, The Intelligent Investor. Graham, often referred to as the father of value investing, emphasized one fundamental principle, the value of information. He wasn't just talking about data and numbers. Graham urged investors to deeply understand what they're investing in, to study market trends, and to comprehend the economic forces at play. In the world of finance, information is king. But let's break down what this really means. It's not just about having data, it's about understanding it. Think about it like a map. Having a map is great, but if you don't know how to read it, you're still lost. Benjamin Graham taught us to look beyond the numbers. It's about the story behind a company, the broader economic environment, and market trends. It's about being curious, asking why a stock is priced a certain way, what influences market movements, and how global events impact our investments. And this doesn't apply just to big investors. Even when managing personal finances, understanding the why behind your spending patterns, the how of your savings growth, or the what influencing the interest rates on your mortgage can make a profound difference. Let's take a real-life example. Imagine two individuals planning to invest in the stock market. One dives in based on a hot tip from a friend, while the other takes time to research and understand the company's background, financial health, and industry position. Fast forward a few months, and the difference in the outcomes of their investments could be substantial. This isn't just about playing it safe, it's about playing it smart. Graham's teachings remind us that the more informed we are, the better our chances of making decisions that align with our goals and risk tolerance. Now that we've grasped the value of being informed, let's move on to our next lesson, where we'll explore another critical aspect of wise financial decision-making. Warren Buffett, known as the Oracle of Omaha, is not just an investor, he's a testament to the power of patience. His investment philosophy is simple yet profound. The stock market is designed to transfer money from the active to the patient. Buffett's approach emphasizes long-term thinking over chasing quick gains. He invests in companies he believes in, not just for a year or two, but for decades. This isn't just patience, it's strategic foresight. Let's look at one of Buffett's legendary investments. In the late 70s, he began buying stock in Coca-Cola, recognizing its enduring brand value. Despite market fluctuations, he held onto these shares, and over the years, this patience paid off enormously as the company continued to grow. This story is a powerful reminder that in finance, as in life, the greatest rewards often come to those who wait, who believe in the future, and who understand that true value unfolds over time. Warren Buffett, in The Essays of Warren Buffett, underscores a fundamental principle of investing, diversification, and risk management. He advises, do not put all your eggs in one basket. The essence here is not just about spreading risk, but also about maximizing opportunities. Diversification means having a mix of investments that react differently to the same economic event. This strategy reduces the risk of a major loss to your portfolio. For instance, let's consider Steve, an investor who diversified his portfolio across various sectors and asset classes. When the tech sector dipped, his investments in other areas like healthcare and consumer goods cushioned the blow, showcasing the strength of a diversified portfolio. Effective risk management through diversification isn't just a tactic, it's a long-term strategy for both preserving and growing your wealth. If you found these insights helpful, please like, share, and subscribe for more content like this. We'd love to hear about your financial journeys, the lessons you've learned, and the successes you've achieved. Drop a comment below and let's continue the conversation.